Alright, so how do you trade? Let me show you right now how I trade. So okay, as you can see, what we have here is GBP USD. That is the trade that you are seeing right here. So the strategy that I like trading is the liquidity concept, because I understand that it's liquidity that moves market. We all know that it's liquidity. Market six needs liquidity to buy, market needs liquidity to sell. So for a buy market to continue, market needs liquidity, and for a sell market to continue, market needs liquidity. So if you can understand where your liquidity levels are, you can definitely know when to enter for a market. So that's the concept, and I like trading, and I also like trading the SMC concepts. So I'm going to show you those two concepts in this video. I'm going to identify it for you to understand what I'm talking about. So your first step is identifying your break of structure. You need to know where your market is going, what market is doing. So this is the time frame that we're using, 1 hour time frame. So this is the break of structure, as you can see at this level. So this was the last low. So I remember I said I like trading the liquidity concept. So where is liquidity? What is liquidity? Liquidity is actually levels where last buyers or last sellers keep their stop loss. So it's simple as that. Don't complicate things. So remember, this is where market broke structure, and this was the last low. So if somebody that bought market from here all the way up to this point, so this is where his or her stop loss is. So remember, market pullback, you can see market pullback to take that liquidity, to grab that point, to grab liquidity. So after that market grab liquidity at that level, and that was done, you see what market did. Market skyrocket up back again. So you can see what happened right there. The reason was because market took liquidity from this low here. That was why market was able to buy up again to this level, as you can see. So from this level now, you can see this was the last sell that dropped market down till it grabbed the last low. So this was where these sellers here, this is where their stop loss is. This is where their stop loss is. So as you can see what happened when market get to that level. So when market gets to that level, market drop back down again, as you can see. So market seeks liquidity. So you understand liquidity. So this can actually be your first trade as somebody that is trading a liquidity concept. So here, after market grab this liquidity, you can definitely know that market is going to go up again, because market are finally grab liquidity from the downside. So you follow what I'm doing. So the next step now is when market get to that supply level, that level where market drop down. So that was the supply level. You get that was where the last sellers, these people that sell this market, this is where they are keeping their stop loss. Remember, we are trading liquidity. So when market pull up the way to that level, you see what market did again, because it's finished grabbing that level again. So you can see what happened. Market drop. It was a supply level. It finished taking liquidity from the last people that sell. So that is why it dropped again. So after dropping, you see what happened. After dropping, it drop again to take this people that bought here, people that hold their trades here. It drop again to take them out again. That is what happened here. So as you can see from this level, market grab that liquidity at this level, grabbing this point, because people buying here, this is where their stop loss is. People buying to take profit here, this is where their stop loss is. So market drop back down again to take their stop loss, so that it can be able to go up again. So pay attention, see what market did. So after that was done, you can see what market did. So you can enter for a buy trade here, because you definitely know that market has finished taking liquidity from the downside and it's ready to buy up again. So from here now, you can see what market did here from this level. After market take that liquidity, it's moved up again and it dropped back down. It's moved up again and it dropped back down, and it's moved up again to create a double top. Before this particular trade that you are seeing here, I entered this trade using SMC strategy, and that's what I'm going to explain right now. So remember, after market grab this other liquidity, buyers now comes in. You get? So buyers now comes in from this level because it has finished taking liquidity from the down level. So buyers now comes in from this level. So from this level you can see what happened. So what happened from that level? When buyers comes in and push market up to this level, you can see market drop back down and it went up again. Respect this supply level again. This was just a retracement and it's pulled back to this last sell that break structure. This was the last internal break of structure. After it break this structure to the upside, it created a double top. This was just like a liquidity. Double tops are liquidity. If you need to take your liquidity cost very seriously. If you understand liquidity, you can actually know where market is going to and where market is going next. Understand? So I said I trade this particular reversal using SMC strategy. What is the SMC strategy? You understand your break of structure. After getting your break of structure, you can see there was a gap. There was a fair value gap. Remember when I said something that when market creates a gap, it will always comes back to filling that gap. So remember there was a buy here, after market drop back down and it buy up again, creating that gap again. So here now was just a pull back to filling the gap. So after market pulling to fill in that gap, where is it going to react from? It's going to, because this was the very last sell candle. As you can see, that was the last sell there before that sharp move. So that is the other block there. So you mark this is your other block region. Now that's where you're supposed to enter the trade from. You can see market drop back down and it's buy up. Let me show you guys something. You can actually let me show you guys something. You can actually make use of this tool too, or to know what market is doing. I make use of these tools to get a very nice entry and a very nice precision of what market was doing. So I use this tool to, because from this level, I mark from this level because I know this was the last low. So let's mark from here. This was the last low, that was the high, there. So before market create this other low here, so after market created this other low here, it went up again to create this point, and then it went back down to create this low. It went back up there to create that high. That was liquidity, to create this liquidity. And then this was just a pullback, where if market is pulling back from here, where is it going to? If market is pulling back from here, where is it going to react from? It's going to react definitely from this region here. So if I pull this thing that I've marked, let's pull this thing out. So I'll show you what you will normally see. So you see what I did there. So if this is we know that this was the liquidity grab. If this was a liquidity grab, then you should know now this is your break of structure. So you should definitely know that this level now should be your point of interest. You should definitely know that this point now should be your point of interest. So if market is coming back down, it's coming back to react from this your point of interest. So this point now is this point. Sometimes you might see something like this. It will look very clean and simple for you. You can just use this to mark it. It will help you too as a beginner. So you get, I'm just showing you extra tip on how to catch up trades like this. So if you enjoyed this video, give this video a thumb up, subscribe to our channel, and stay tuned on our next video where we'll be revealing more trading strategies. See you in our next video. All love, guys.